Hey guys, James from Remax here. Thank you for joining us today. Today we've got David Burrett to interview. He's a director of Plex Finance Group. Obviously mortgage broking is what they do, amongst other things. But today we thought we'd ask him some frequently asked questions, at least from my perspective, that I get asked every day. And hopefully he can help you with whatever questions that you have as well. So David, thanks for joining us. First of all, why don't you tell the viewers a little bit about yourself and Plex?
Yeah, definitely. So I guess Plex Finance started a couple of months ago now, fairly new to our business, but have been in the industry for quite some time. Really, our focus is on just educating people, not just getting them the right loan, but helping them understand how the loan can impact their finance journey for the future.
Yeah, great. And obviously there's all this chatter about this big mortgage cliff, and refinancing is, I guess, becoming just maybe a day-to-day experience for people. How about we start there? What does, I guess, refinancing look like in today's market?
So in the refinance market, it's very much what is happening at the moment. A lot of people are looking at their loans going from a 2% or even a 1.9% interest rate to something in the 5s and 6s. So in this sense, we really want to help people go through that step of understanding their budget before they get to that point where they, hit that mortgage cliff.
Yeah.
And anticipating what they need to do to make sure that they can still afford their house or investment properties. A really big thing, I guess, for us is that, you don't always have to leave your current lender. Mm-hmm. It's one of those things, not to talk myself out of a job, but you can negotiate with your current bank as well.
Yep.
I think that's really important for people to understand. It is a lot of stress, a lot of effort to sometimes refinance, but it doesn't have to be as long as you're being proactive enough about it all.
Yeah, great, cool. And how long is it taking at the moment, do you think? I guess, first of all, if you're going to try and refinance with your current bank, and then if you are looking at switching banks to grab a better rate or a better, I guess, solution for whatever you and the family need.
Yeah, definitely. So it's one of those things where you really want to start planning probably a month or 2 months out from when you're looking to actually make the move. The reason behind this is because, an application with a bank at the moment can take 2 to 3 weeks, and your outgoing bank, they like to drag their feet as well. They want to hold on to you as long as possible. So if you can kind of be proactive and anticipate the fact that they might take some time, it means that, you can really hit the front foot. And the second you roll off into a variable rate and you go from that 2 to 6% mark, you might be able to save a bit of money and even get some cash back as well, a day or two into that new variable rate.
Yep, cool. I guess the other big thing that obviously with the market rising, particularly in Toowoomba, I can't speak for other areas, but we've seen definitely a big increase in, I suppose, the median house value. There's obviously some equity in there for people that did lock into those rates. How do you go about accessing that, and how can that, I guess, help their journey, we might say? I suppose, how does that help the family from their perspective? Can you use that equity in some way to help?
Yeah, so that's a really important point there, James. So at the end of the day, a lot of people have seen huge growth in where they've been on their value of their property. And for that, it means that there's equity available that they can pull out and access. So a lot of the conversations we are having about doing, renovations to the house to add more value again, and accessing, 50 grand maybe for a new kitchen and bathroom is what we commonly see. But also for those that are in a position to access equity and invest in real estate too. It's really important in that sense that you structure it the right way. So you're making sure that as much of the debt as possible can be tax deductible. So yeah, it's a process where if you're looking to roll off onto a variable rate, we always ask the question, do you want more cash out? Do you want to have that cash in your back pocket, even just for a rainy day, rather than being locked up with the bank instead? So we can access the money, put it straight back against the loan itself, so you don't pay a single dollar of interest until you're ready to use it yourself. But at least you have access to that money from then on in a redraw or an offset account. So definitely a good process to go through. And keep in mind, different banks have different valuation systems too.
Yeah.
So we can see some vary between, about 200 grand at times, where one bank will be very, very generous in regards to where your valuations stand. But I think you're right, mate. Toowoomba market has grown incredibly in the last couple of years. And still we're seeing that today that where we were 6 months ago, we're still seeing prices increase from valuations from certified valuers that the banks are paying.
Yeah, great. Okay, cool. And if someone is feeling stuck, let's say, we've had this locked in interest rate at roughly 2% for the last couple of years. We're rolling off in 6 months and we're looking forward to, I guess, what that repayment's going to be. And we're thinking we're really going to struggle. What little things can I do over the next sort of 6 to 12 months to get ready for that rate increase? And I guess how can you help from your perspective once we get there? And what does that look like, I guess?
Yeah, for sure. So something that is probably really key in that aspect is anticipating where things are going to be heading. So even if we're looking at interest rates today, in the 5s, they will eventually probably get to 6s. And so we really want to plan ahead and anticipate that if our budget's going to be a little bit tight in the future, what can we do today? Whether that is pulling out a bit of equity from our property to help weather the storm, during Christmas, during expensive times such as that, and have that in our savings account. Or whether that's more important to say, okay, well, we might want to try and find a sharper rate or even lock in early. Find that fixed rate which suits your budget at the moment and lock that in. Fixed rates aren't necessarily about saving money, it's about budgeting for the future. So if you can budget to say, hey, I know I can afford this repayment, you don't need to stress about your variable rate going up further because you know exactly what it's going to be for another 2, 3, 4 year period.
Yep, great. Cool. And when you are refinancing, obviously, that's obviously incurring a new loan. And in regards to that, is there any chance of extending things? I suppose your 20 to 30 years are quite common, but if I've already been locked in and I bought my home 5 years ago, what does that look like from my perspective if I want to jump ship or I suppose even negotiate with my current bank around the time frame?
Yeah, so that's a key piece as well. Repayments are calculated obviously on the interest rate, but how long you're paying the loan off for as well. Now, most banks work on a 30-year period. There are some that do 35 and even 40-year periods, and that can reduce your repayments down. But obviously, as you progress through your loan, if you have been paying it for the last 5 years, you've got a 25-year loan term left. If you re-extend that out to 30 again, your payments can go down pretty significantly.
Yeah.
So that's something that we do help a lot of people with. And it's one of those things where it's allowing your minimum repayment to be as low as possible because you always have the option of paying extra. So with that flexibility, again, as you go through more expensive periods, such as, kids doing things with school or kids needing braces or Christmas is coming up, you can drop your repayment back down to the minimum amount. But then when you're ready, you can put it back up a little bit higher as your budget allows. So don't worry about often extending the loan term over a longer period of time because you can still pay it off faster. It just gives you that flexibility to say, hey, things are tight this week. I'm going to make the minimum repayment again.
Cool. Hopefully that helps you guys out at home. We've got a couple more questions for David, but we're going to probably pivot to first home buyers. So if you're a first home buyer, really tune in here. And I wanted to talk about the new Queensland government scheme, which is the shared equity scheme. Obviously, we're seeing that a little bit more. People asking questions of me about that when they're purchasing property. So if you wanted to take us through a quick crash course, and then the guys can obviously look up the government website and get all the nitty-gritty details from there.
Yeah, definitely. So there's a couple of schemes out there for first home buyers at the moment. The ones we all know is the First Homeowners Grant, which is for new builds and newly constructed properties, 15 grand cash in hand. Then there's the First Home Guarantee or the Regional Home Guarantee, basically the exact same scheme, just we qualify for both being in Toowoomba. Again, that saves you about $15,000 in fees, which is pretty fantastic. And then there's the stamp duty concession as well for first home buyers. Again, saving you about 10 to 15 grand in total. The one that we're referring to now, though, is a new scheme which will come out at the start of next year, but has been announced recently by the Labor government for federal parliament. So the big thing there is that they're prepared to pay part of the funds required towards a house purchase. The easiest example I've got, if we're buying a $500,000 house in Toowoomba, you only need to afford a loan of 300 grand, and the government will come along and cover that extra $200,000 for you without having to make any repayments to the government or anything like that. They literally will own part of your house.
Yeah.
Now, from the perspective of those first home buyers out there, that may allow you to buy a house with that extra bedroom, with a better suburb, better area for $300,000. Cost to yourself rather than $500,000, even though the house overall is worth 500 grand. A great scheme, great potential there for people to really get into a bit of a better housing situation that they can stay in for a longer period of time, but something that will be launched officially come early next year.
Okay, great. Well, that's pretty much all I had for David. If you do have any other questions, feel free to comment down below and David or I will get back to you. Or if I can't answer it, I'll swing you in his direction. But thanks so much for today, mate. Hopefully this has been useful to you guys at home, and we'll look forward to coming to you with some more insightful content soon.
Thanks for having me. Thanks, guys.